think, I wish I knew this about money sooner. By your 50s, money isn't a theory. It's mortgages, bills, and the ticking retirement clock. The problem is, most of us were never taught the basic rules. This video shares 5 foundational money lessons that can change everything. No get-rich-quick schemes, just simple, sustainable habits to help you reclaim control and finally feel prepared for the future. If you're ready to learn what you should have known years ago, let's begin. Lesson 1. Spend less than you earn. How is it possible for someone earning a 6-figure salary to live paycheck to paycheck, drowning in anxiety? This isn't a rare story. It's a silent epidemic hitting millions, especially in their 50s. And the cause isn't a lack of income. It's the violation of the single most fundamental rule of personal finance. Spend less than you earn. It sounds almost too simple, doesn't it? Yet this is the very principle that separates financial stress from financial peace. In our early years, money feels abstract, but by middle age it becomes brutally real. Mortgages, childcare, healthcare, and a retirement that's no longer a distant dream. This is when the consequences of our habits truly surface. The primary villain in this story is lifestyle inflation. It's the natural human tendency to upgrade our standard of living every time our income rises. A bigger salary leads to a nicer car. A promotion leads to a larger house. A bonus leads to a more luxurious vacation. While none of these things are inherently bad, they create a dangerous trap. You're running faster on the financial treadmill, but you're not actually getting anywhere. Your savings rate stays at 0. You're building a life on a foundation of sand. Here's the truth. Spending less than you earn isn't about being cheap or sacrificing your quality of life. It's about creating the single most important thing in your financial world, a margin. This margin, this gap between your income and your expenses, is your power. It's your defense against life's inevitable surprises, a sudden job loss, an unexpected medical bill, an urgent home repair. Without a margin, these are catastrophes. With a margin, they are merely inconveniences. This gap is what allows you to pay down debt, invest for the future, and build true security. Many fear that living below their means will feel like deprivation, but the opposite is true. The person spending $7,000 a month with no plan is often far more stressed than the person spending $3,000 with intention and control. A comfortable life doesn't come from spending more. It comes from spending smarter. If you're currently caught in the cycle, it's never too late to break free. The journey to take back control starts by first diagnosing the problem. Track every dollar you spend for 1 month. Don't judge, just track. This isn't about making you feel guilty. It's about giving you data. You can't fix a leak you can't find. Next, create your rule. Implement a simple budget like the 50-30-20 rule. 50% for needs, 30% for wants, and 20% for savings. Adjust it to your life, but have a rule. And finally, the most critical step of all, automate your success. Set up automatic transfers to your savings and investment accounts the day your paycheck hits. Don't save what's left after spending. Spend what's left after saving. That one mental switch is the difference between being proactive and being reactive. It's how you build a future that is strong, flexible, and deeply secure, one paycheck at a time.
Lesson 2. Don't let your money sit still. Make it work for you. There is a silent thief that visits millions of bank accounts every single night. It doesn't steal your dollars, but it steals their power. This thief is called inflation. And the common belief that cash in a bank is safe is one of the most dangerous financial myths, especially for those in their middle years. You've worked hard for your money. You see that balance in your account, and it feels like security. But here's the uncomfortable truth. Any money that is sitting still is guaranteed to lose purchasing power. That $10,000 you have today will not buy $10,000 worth of goods in 5 years. By playing it safe, you are locking in a slow, certain loss. For those in their 40s and 50s, this isn't just a slow leak, it's a direct threat to your future retirement. So what's the antidote? It's not just about saving more. It's about making a fundamental shift in your thinking. You must move from working for money to having your money work for you. And the engine for that change is investing. This isn't about chasing high-risk stocks or get-rich-quick schemes. It's about smart, consistent, long-term strategies. For most people, the simplest and most effective path is through low-cost index funds. These are diversified, set-it-and-forget-it investments that track the overall market. You don't need to be a Wall Street genius. You just need to be consistent. Take full advantage of tax-advantaged retirement accounts like a 401k or IRA. And if your employer offers a contribution match, that is literally free money. Leaving that on the table is like refusing a pay raise. But the real magic behind all of this is the most powerful force in finance: compound interest. This is where your investment returns start earning returns of their own, creating an unstoppable snowball of wealth. For example, investing just $500 a month in an index fund with a 7% average annual return could grow to nearly $250,000 in 20 years. Almost half of that wealth would come from compounding alone. This shows that wealth isn't built in one big move. It's built with small, disciplined steps over time. Many people hesitate because they think investing is too complicated or too risky. But today, technology has made it more accessible than ever. Robo-advisors and low-cost online platforms can build and manage a portfolio for you with minimal effort. And as for risk, let's be clear. All investing involves risk, but the greatest risk is doing nothing at all. Keeping your money in cash isn't safe. It's a surefire way to fall behind. Playing it too safe is the most dangerous financial decision you can make. If you're in your middle years, the time to act is now. Don't let the money you worked so hard for sleep. Put it to work. Let it grow. Because when your money starts working for you 24/7, you finally break free from the earn, spend, worry cycle and start building a future that is not just secure, but truly free.
Lesson 3. Use debt wisely. Debt. For many, that word alone triggers anxiety. But what if I told you that debt can be a powerful tool that builds your future, or it can be a chain that keeps you trapped in the past? The difference all comes down to one thing: control. The most dangerous kind of debt is the kind that creeps up on you. It starts with the effortless swipe of a credit card. It barely feels like real money until the bill arrives. You make the minimum payment, thinking you're managing. But behind the scenes, interest rates of 18%, 20%, or even 25% are working against you, turning a small purchase into a quiet, snowballing burden. This is the consumer debt trap, and its true cost isn't just financial. It steals your freedom. You're no longer working to build your future. You're working to pay for your past. That is not a life of freedom. But not all debt is created equal. To take control, you must first understand the crucial difference between good debt and bad debt. Good debt is a lever. It's an investment in yourself that has the potential to increase your net worth or future income. Think of a mortgage for a home you can afford, a student loan for a valuable degree, or a loan to start a business. It's strategic, purposeful, and designed to move you forward. Bad debt, on the other hand, is a drain. It funds consumption and depreciating assets. It's the credit card balance for things you didn't need, the personal loan for a vacation you couldn't afford, the car upgrade to keep up with appearances. It provides a fleeting moment of satisfaction in exchange for years of financial strain. Once you see this distinction, your entire relationship with borrowing changes. You start asking the right questions. Will this debt build an asset? Is there a clear plan to pay it off? Does this move me closer to my long-term goals? To truly master debt, you must first know your numbers. Become the master of your financial dashboard. Know exactly how much you owe, to whom, and at what interest rate.
Then attack the debt with the highest interest rate first while making minimum payments on the rest. This strategy, known as the debt avalanche, saves you the most money in interest and helps you build momentum fast. This isn't just about getting out of a hole, it's about building a ladder. Smart debt management builds a strong credit score. In the US, a high credit score is a superpower. It unlocks lower interest rates on future loans, better insurance premiums, and gives you incredible financial leverage. Debt is not the enemy. Uncontrolled debt is. It is a natural part of modern financial life, not something to fear, but a tool to be managed with wisdom and intention. When you learn to master this tool, you don't just manage your finances, you take back control of your future.
Lesson 4. Have clear financial goals. What is the single biggest difference between wishing for financial freedom and actually achieving it? It isn't income. It isn't luck. It's clarity. So many people, especially in their middle years, are living in a financial fog. They have vague desires. I want to live comfortably, or I hope to retire early. But hope is not a strategy. Vague wishes lead to vague actions, and vague actions lead to zero results. Without a clear target, you're simply drifting. And for those in their 40s and 50s, drifting is no longer an option. The moment you give your dream a number and a deadline, everything changes. A wish says, I want to retire someday. A goal says, I will have $500,000 in my retirement account by age 60. Suddenly, the fog lifts. You now have a destination. And with a destination, you can create a roadmap. You can reverse engineer your path to success. How much do you need to save each month? What average return do your investments need? A vague dream becomes a solvable math problem. You stop living in maybe someday and start taking concrete, intentional steps today. This is where the proven SMART framework gives your goals real muscle. Your goal must be specific, measurable, achievable, relevant, time-bound. But having a goal isn't enough. You must bring it to life. Write it down. Post it where you can see it every single day. On your desk, your bathroom mirror, your phone's wallpaper. The simple act of writing a goal down makes it real to your brain and dramatically increases the likelihood you will achieve it. Review it quarterly. Let it be the anchor for every financial decision you make. Financial goals are not burdens designed to make you miserable. They are your compass. They don't restrict you, they guide you. They give you the power to say no to a meaningless impulse buy because you are saying yes to a future of freedom and security. They help you live more mindfully today so you can enjoy true peace of mind tomorrow. If you've never done this before, I want you to take action right now. Grab a piece of paper. Write down one specific financial goal with one number and one date. That isn't just ink on a page. That is the blueprint for your new future. That is the first real step toward the life you've always hoped for. Lesson 5. Protect what you've built. What if I told you that everything you've been taught about building wealth is only half the story? You can save diligently, invest wisely, and live below your means for decades. You can build a financial fortress, brick by brick. But what you may not see is the single hidden vulnerability that could bring it all crumbling down in an instant. This isn't about a market crash or a bad investment. This is about life. The truth is, one unexpected event, serious illness, a sudden accident, a contentious lawsuit, can erase a lifetime of financial discipline. Are you prepared for that? This is the question that separates amateur financial management from professional wealth strategy. Building your fortune is the offense, but a winning team needs a world-class defense. Today, we're talking about that defense. We're talking about protecting what is yours. Let's start with your first and most critical line of defense: insurance. Many view insurance as a burdensome monthly expense. I challenge you to see it differently. It's not an expense, it's a shield. It's the invisible armor protecting your entire financial life. Think about health insurance. In a country where a single hospital stay can cost more than a house, going without it isn't a calculated risk, it's a financial death wish. You don't need the most expensive plan on the market, but you absolutely need a policy that shields you and your family from catastrophic medical debt. This is non-negotiable. Next is life insurance. This is perhaps the most misunderstood tool in finance. Let me be clear. Life insurance isn't for you. It's for them. It's for the people who depend on your income. It's the ultimate act of love, ensuring that in a moment of unimaginable grief, your family's life isn't also turned upside down by financial chaos. It's what allows your children to stay in their home, finish their education, and have a future, the one you always dreamed of for them. The peace of mind it buys is priceless. And what about the assets you can see and touch? Your home, your cars, your investment properties. Property and casualty insurance is the guardian of your physical world. A fire, a flood, a lawsuit from a slip and fall on your property. These aren't just dramatic movie plots. They happen. Are you reviewing your coverage annually? As your assets grow, so should your protection. A small premium today can prevent a total loss tomorrow. But a strong defense goes beyond just insurance. Insurance protects you while you're here. What happens when you're not? This is where we elevate the conversation to estate planning. Now, when I say estate planning, many people tune out. They think that's for the super rich. This is one of the most dangerous myths in personal finance. If you own anything, a home, a car, a savings account, and you have people you care about, you need an estate plan. What is it really? At its simplest, a will. Think of a will not as a document about death, but as a final letter of instruction to your family. It's your voice, providing clarity and direction when they need it most, saving them from the agony of court battles and legal confusion. It's a profound gift. For those who want more control, there is the living trust. Imagine being able to guide how your legacy is used long after you're gone. A trust can ensure money is set aside for a grandchild's education, or protect a young heir from their own financial immaturity, or support a charitable cause you believe in. It's your instruction manual for the future. Finally, there's the in case of emergency kit every adult needs. What if you're alive but unable to make decisions for yourself? This is where documents like a durable power of attorney for finance and a healthcare power of attorney become invaluable. These aren't just legal forms. They are acts of profound care. You are appointing someone you trust to be your voice, to execute your wishes, and to lift an impossible burden from your family during a crisis.
I know this can feel overwhelming. It sounds complex and maybe even a little morbid, but the cost of inaction is infinitely higher. You don't have to figure this out alone. Financial advisors, attorneys, and even modern online platforms have made this process more accessible than ever. The most important step is the first one. Don't wait until you have more or you're older. The time to build your defense is now, while things are calm. Ultimately, protecting your assets is the purest expression of why you started building them in the first place. You save to provide security, you invest to create a stable future, you protect your wealth to ensure that the people you love are never derailed by the unpredictability of life. That is the true definition of financial peace of mind. You don't need to be perfect, you just need to start. Every small decision you make today, reviewing spending, investing, is a brick paving your road to financial freedom. Don't let your future be just a wish you never acted on. The power to build a life of peace and stability is in your hands right now. For more actionable insights that empower your journey, hit subscribe, and let's build that future together.